Hello, hello. Mic test, mic test. Hello guys, so this will be our 23rd webinar. Currently I'm just testing the microphone, so if you guys are able to hear the voice, and I have also shared the screen already, so kindly let me know. Looks like I will have to switch a connection here before we proceed. So now it looks like working here. So now it looks like working here. Okay, Steve, thank you for the confirmation there. So now it looks like working here. Okay, Steve, thank you for the confirmation there. Okay, in that case, let's quickly load up the disclaimer and everything and proceed with our webinar here. So I believe you must be able to see a disclaimer here on screen. If you can confirm finally about the screen, we can then start off. Clever, yes, thank you for the confirmation there. Okay, so guys, it looks like everything is working fine. So in that case, let's just get started with the legalities here. So here is the disclaimer on screen suggesting all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing, then you yourselves will be liable for your profit, loss, and loss of profit, or any other situation arising from the same. Okay, with the legalities out of the way, let me give you a quick introduction. So my name is Nirav Yadav. I am the admin and owner of this website 50eyes.com and the YouTube channel 50eyes Market Analysis, where this webinar is being broadcasted. About the webinar, this is the 23rd in the series of trading opportunities webinars that we have been conducting. These are conducted thrice per week, specifically Monday, Wednesday, and Friday at 2 p.m. GMT. We conduct these webinars, right? And apart from the webinars, a little bit about my work. I am the author of the book Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott Waves. As you can see over here, it is available on Kindle, Amazon's Kindle platform for instant access. I'll a little bit more about the main highlight feature of my work. I have been keeping a track record of all the analysis that I do for over the 6+ years that I've been doing it. So in 2016, as you can see, my accuracy has been 83.34%, 2017 87.5, 2018 84.61. You can just scroll down and check the instrument name, the analysis presented, and how it worked out with the video link over here. So on so forth. If we move forward, 2019 84.88%, and 2020 88.52. Again, the same pattern. You can check the instruments name, gold, S&P, Bitcoin, etc. The analysis, the video link is over here, and you can check out what happened. 2021 again 82.22%. I haven't got the time to compile it for 2022, but 6 years I believe is more than enough. I'm showing it off to show you that our accuracy has remained above all industry standards, because generally even 60% is considered very high in this industry. So that's for my work, and my area of expertise specifically is Elliott Wave, which is an advanced form of price action analysis. With that introduction, let's just have a quick outlook of the webinar, right? So the webinar will be done in the order of first we will cover the Forex pairs, specifically Euro USD, EURCAD, USDJPY, EURJPY, crude oil, gold, S&P, and then Nifty followed by Bitcoin. After I complete an instrument, I will ask you guys if you have any queries. If you have, then you can just type them in the comment section. Otherwise, we'll just move forward with the webinar. So let's head over to our first pair. So our first pair over here is EURUSD, and if you guys recall last time when we were discussing this instrument, our analysis was exactly what it is on screen here, right? And I propose that either it can reverse from this level or it can reverse from this level. So these were the two levels of interest here. My personal preference was that we should wait for the market to reach this level before it reverses. If not, if it directly reverses, then we'll look to go long above the last high. So now it has already done that. So most likely the 4 is complete and most likely it is into the fifth wave up. So that basically means that our analysis is working. So in that case, we'll just head over and try to figure out the possible targets for this fifth wave. However, do keep in mind, just because it is reversing from here, the possibility of more sideways movement is not completely relegated. But in this particular case, this leg is extremely strong. So I am satisfied with placing the wave 4 here. With that out of the way, let's just quickly head over and check possible targets we have for this. So first of all, because we are checking wave 1 equal to wave 5, so the level around the price of 1.09365 comes out as our 1:1 target, 465 points, 465, I mean pips, or whatever you call that, right? Secondly, you can also check the 61.8 level, which should be taken as our minimum target here. So 61 dot is coming around very near. It's a little higher than the high. So these are the actual adjusted targets. So minimum target 61 dot is 1.07709 and then 1.09473 are our targets for the expected wave 5 to the upside. Nothing need to add here. The targets are there and the count is already seemingly working. So that's my take on EURUSD. If you guys have any doubt, you can type it in the comment section. Else we'll just head over to our next chart, which will be the chart of EURCAD. Also, guys, if you are watching it and you are understanding what we are discussing, then type in clear in the comment section so that I know everybody in the viewers is on the same page. So let's discuss EURCAD. So EURCAD, last time when we discussed, we made it quite clear. Thank you for the clarification there, Steve. So we made it quite clear that I wasn't very much interested in taking shorts in this market. However, the counter was clear for sell-off till our target 2. So if you guys are not following these webinars, I'll just make it very clear that these analyses are done in live market conditions because currently the markets are open. So most of the trades that we will discuss here, they sometimes play out during the webinar itself, sometimes right after the webinar. So in order to make the most out of these webinars, you need to attend them live as they are happening. Otherwise, there isn't much point in checking out that I said this will go here and it has already gone there. So what are you here for anyways? So getting back to the point here. So when we were discussing this first time, our trade setup was that if the market breaks below this green channel, this one, then this market will head over to minimum target 1, which was 1.439. And then if it continues even further down, then 1.426 was our target 2, as you can see over here. So it achieved our target 1, which was the minimum we were expecting. Then the proposition was later on, like in I think last to last webinar, which was the 21st webinar, whichever webinar was conducted here. because as I said, we conduct 3 webinars every week, Monday, Wednesday, and Friday at 2 p.m. GMT. Right. So whichever webinar we were discussing, our next setup was that if this market goes below this orange channel, right, this will be another sell setup with stop loss at the recent high, which is again around 1.5204. Right. So again, it actually followed through. It went below the channel and it has continued downward and exactly achieved our target too. So this makes it a picture perfect setup. We were able to catch target one, and then we were able to catch after this up leg. Remember, not, let me change the color. So I'm talking about first we were able to capture this leg and then this leg down. Right. So this has worked out pretty much in our favor. Right now, as I said in the last webinar as well, the possibility of this market heading much lower is still not relegated, even though the price action does suggest upside movement and the downside target minimum has been achieved. But if you recall, one of the bigger picture perspective when we discussed, there was a count suggesting much further downward movement. So it has not yet been relegated. What that basically means is that we are not really interested in longs unless it crosses what is this last recent high, 1.45153 something. So unless it crosses this level to the upside, we will not be interested in any particular longs. And even when this level is crossed, it is not a buy trigger, it is a trigger to analyze the market and see if we can enter longs. So EURCAD is, if you were short, you should have already booked the profits. By the way, if you were short and you have booked the profits, do let me know in the comment sections. That will be nice for other viewers to check out. So if you were short, you would have booked the profits. That's the end of the trade. New trade, we wait and watch. Possibility of upside is there, but we wait for the trigger to the upside. Downside is there, and I personally don't want to propose anything downside right now, but let's see if it goes a little bit lower than the current level, then I might check this chart again and see. So I have placed the alert a little bit lower than the last recent low. So EURCAD worked out, and let me know if you guys have any doubts on the current plan we have before we move on to the next chart of USDJPY. Steve, Clever, and Harry, let me know if you guys were able to catch what we were talking about here. Okay, guys, so USDJPY over here on screen. So last time when we discussed USDJPY, our plan was that it looks like probably the wave Z is complete to the downside and it can take off to the upside. However, as I said earlier, the Z's completion is questionable at best. There was no clear sign that the wave Z is complete, because generally when the wave Z is complete, we would see, I'm not saying very clear upside movement, but this has sort of remained choppy. As a matter of fact, this particular leg can be counted as 3 waves in the upward direction as well. So based on that, I was saying that it's better to wait and watch. Right. So far what we see is that this market is showing some bearishness here after this leg up, and we currently do not want to sell it either. And if it goes down, let's just quickly check what setup will be playing out in that case. If it goes down, the setup we will be looking for is this being the A wave, this being the B wave, and this heading down for the C wave. So it will eventually take out the low if it's still continuing in the downward direction, which is 129.459. And if it is going to take out the low, then we can measure this leg and project it from this high, so we can get some targets there. But as I keep saying, targets are not that necessary. What is more important is we catch the right direction. So far what it looks like is that this ABC setup is seemingly working out. So if this ABC setup is working out, then currently you can enter shorts, but that will be a risky strategy as per my understanding. A better strategy will be to wait for further more downside, so that we have a sort of confirmation that it is heading much more lower. So I personally will be interested in taking shorts around or lower than the 130.6 levels, or 130.67 levels, roughly speaking, which is basically near the last lows, right? And as I said, practically speaking, it is still a short with the current stop loss over here, but it is generally better to wait for confirmation in these kind of situations, right? So USDJPY, that's the plan here. We wait for some shorts, upside no confirmation, downside aggressive shorts entry is possible, conservative or confirmation still awaited. That's my take on USDJPY. Thank you, Clever. Thank you, Hari and Steve, for the confirmation on the last one. Let me know if you guys understood our plan on USDJPY before we head over to Euro. Pretty much, by the way, sort of same plan on Euro as well. But this one is looking a little bit less bearish. Okay, so let's have a look at our discussion on EURJPY. So last time when we discussed, our plan was sort of similar to USDJPY, because these two pairs seem to have a good amount of correlation, right? And if you guys are not following my webinars from the continuously, then I like to point out that we were able to catch this leg down, like literally from this red channel break to this target minimum. So we were able to catch this much movement, 2.1% down movement, and you can check the pips and everything here, right? So again, as I keep repeating, you need to attend these webinars when they are conducted live, unless you are just interested in checking things like in the rear view mirror of what happened and what didn't happen, which kind of defeats the purpose, because these webinars are called trading opportunities webinars. So EURJPY, same setup. We are still expecting that more downside is possible, and if more downside is possible, our understanding suggests that this market is having the first wave over here, the second wave over here, and should head lower for the third wave, right? So, but as I said, there is no confirmation for bearishness over here. As a matter of fact, if we check USDJPY and EURJPY together, it looks like USDJPY has a better chance for any bearish possibilities, and EURJPY is having a better chance if our bearish setup fails, right? As a matter of fact, the alert for possible upside movements is at 142.745, which is quite near to the current price, right? So in that case, I'll just let you quickly know that sell setup, again, I'm still looking for bearishness on this counter, but because there is no confirmation yet, and we need to wait and watch, we will set a target, basically alert at 139.337. I have put it near the recent lows, right? And if the market closes or goes below that low even, then I'll be interested in looking again at this chart. But as I said a little bit earlier, again, I will repeat myself. If we are looking for shorts, it's better to focus on USDJPY rather than EURJPY, right? So that's our setup here. Basically, I'll personally will be avoiding EURJPY and focusing more on USD. So let me know, guys, if you are clear here. If you have any doubts, please put it in the comment section as well. Otherwise, we'll move over to the chart of crude, followed by gold, S&P, Nifty, and BTC. Thanks, Jill. Yes, Steve. Well said. It's a time to be patient here. Y and Z waves will do ABC or impulse. So wave Y will have three waves inside of it, A, B, and C. And wave Z will again have three waves inside of it, which are called A, B, and C. So the A, B, and C's are impulse in themselves, but the structure is called a zigzag. Let me just give you a quick emphasis. I'll just draw a rough one here. So let's say this is your W, this is your X, this is your Y, this is your Z. So Y and Z you were asking, so it will have an A up, B down, and C up. Again, Z will have an A up, B down, and C up. And this A up, B down, and C up, the A and the C are impulses. The A and the C are impulses, so it is formed with impulse, but the overall structure is called a zigzag. So basically, it's a zigzag and another zigzag. W is a zigzag, Y is a zigzag, and Z is a zigzag. All are joined by X waves. Hope that clears it out. Let's move ahead. Thank you, Clever, for the information there. Let's head over to the chart of crude oil. So crude oil, let me just quickly put in the time here. So crude oil, last time when we discussed, our analysis suggested that it's better to wait for bearishness, because in the bigger picture, you guys want to check the bigger picture analysis. I think I've discussed it in much more detail in the last one, but I'll give you a quick reference here. We are expecting that this is the A wave up, the B wave down, and this is the C wave up. We do not have confirmation for the same. We will assume that the movement below the 71.72 level on OND data feed. Keep in mind the data feeds is important. If you are using a different broker, different data feed, then the price levels will vary a little bit. Just for reference here, this is the CL1 futures chart on NYMEX, basically New York Mercantile Exchange, and the price here is 75.67, 6768 something, and here it is 75.73. So keep that in mind when I say these prices. You need to keep in mind that the data feed I'm using might be different from the data feed you are using. So anyways, for all intents and purposes, we are expecting that if this is the count A up, B down, and C up, that's basically running flat. If it is complete, we don't really have the confirmation yet. Then we will expect much further downward movement. In my personal understanding, the way natural gas is falling is kind of an indication that we will see at least some more down lag in WTI crude oil. Now, again, these things don't have an exact correlation, but we gotta take the clues from here and there. When the movements are sharp, they do form correlations, in my understanding. And also, the particular count on this chart also seemingly seems a little bit bearish as of now. So again, just repeating the plan we discussed the last time. Nothing really has changed here. We wait for 71.72 levels to be taken out to the downside for possible bearishness on this counter. Right? If we are wrong, we are not entering longs until this market goes higher and takes out the recent highs around 81.46 levels. So pretty much simple here. Wait and watch for possible short setups. And with that, I'll say we conclude our crude analysis. And yeah, before we head any further, I'll just like to again point out we were able to catch this leg up in crude oil, right? And we were able to catch part of this leg down as well. So if you are not following these webinars regularly, you are missing out on a lot of trades. And in the last 4 weeks itself, we have caught 15 plus trades, and 15 I'm saying are the bigger moves. Plus means some minor moves which I'm not counting in. Right, it's 15 plus clear big moves, big percentage moves basically we have caught. And 4 weeks means just a month, which has 20 trading sessions. We have caught 15 plus trades, so that's way too much. And keep in mind these kind of webinars are quality content. These are generally, not generally, almost always under a paid paywall or a subscription service. So if you are watching these, make sure you make the most of them. And again, I like to request you guys that do share them after the webinars are complete, at least in 3 of your circles. If you have a Discord, if you have a Slack, WhatsApp, or whatever. And other than sharing, make sure you have hit the like button on YouTube. And if you are watching it on TradingView, then hit the rocket button over there. The likes make sure that the algorithm picks it up and pushes it higher in the ranking or whatever these algorithms do. So that was my take on crude oil. Let me know, guys, if you have any doubts here. If not, we will move on to the next chart, which will be gold. And if you are clear, do type in clear in the comment section. Thank you, Clever, for the confirmation over there. So let's have a quick discussion on gold here. Sort of following the same count as it was discussed in the last webinar. So in the last webinar, which was conducted on 6th of January, the price was somewhere over here. And our count was exactly the same. We were saying that this looks like wave 1 up complete, 2 down complete, and we were expecting the wave 3 up to be heading for higher targets. If you guys remember, these were the two targets which were proposed. Obviously, this one was not of relevance. It was already hit. And this was the next minimum target, right? And the target was around 1877. The next target is around 1925. So it has sort of continued its upward movement, right? If it is really a wave 3, then hitting 1926 should not be a big deal, because generally wave 3 will be the stronger in the series. Keep in mind, it's not always the case. Specifically in case of commodities, things can be different. Generally wave 5 can be the bigger, but that's more for commodities like crude and natural gas. Anyways, not getting into those kind of discussions. What I'm trying to point out here is that next target is likely, right? And our target minimum is already achieved, right? Kind of a trade where you would want to possibly trail if you are in, right? Because there are some counter scenarios that I am also seeing here. In specific, I'm not very satisfied with the strength of the upward movement, but I believe that this wave 3 can take off right now because it is probably in the middle part of the movement. For instance, if we take the internals of wave 3, then it looks like it might be in the third of the third right now. So existing longs should hold, right? Not much point in exiting here. That will basically be possibly be loss of strong opportunity. So anyways, this is the expected progression here. Let me just quickly push the counts here. So this is the expected way we expect this market can move if our counts are correct. So basically following our plan and hitting the targets right now, keep trailing. And I already suggested the stop loss level, the technical level is 1825, but based on your entry, you might have to push it a little bit higher. Again, your risk management, etc., will determine that level. So gold, following our plan, moving as expected. Nothing new to add here. If you guys are clear on this one, do type in clear in the comment section. Before I move ahead with the next chart of S&P's 500. Thank you, Steve, for the confirmation over there. Okay, now let's head over to S&P's 500. Okay, so remember guys, last time when we were discussing S&P, my take was that I was primarily looking for bearish setups on this counter, right? Thank you, Jill, and thank you, Clever, for the confirmation. So heading back to our analysis on S&P, our primary count was that we were expecting that from this point we had a triangle, and we were counting this as an A down, a B up, and the initial setup was that if it crosses below the 3772 low, then we will be counting it as a C down, right? So that was the sell trigger, by the way, right? The counter view was that maybe the whole leg is complete here, that this is the A, this is the B, and this is the C complete here, and this will now head over to the upside. So now what has happened so far is that this market has headed over to the upside, and this count is definitely valid. Like it can continue higher, right? But personally, I'm not interested in getting entries on the upside here because the bearish possibility still exists. Obviously, on shorter time frame, like on intraday, if I'm trading and scalping, then I won't mind taking some longs here. But the possibility that this market can still go down for the, let me show you what I mean. I'm expecting that the count is A down here, and this is a ABC for B, and this could go down for the C, right? So B can continue a little bit higher as well, but eventually once the B is complete, downside is expected on this counter. So basically the point is it is still not clear for bullish upside movement, right? And if you are going to talk in price action terminology, this might be a bull trap or a trap by the bulls, right? So or a trap by the bears, sorry. So anyways, you get the point. So it is possible that people who got long higher than the last high may have gotten trapped here, and once they have the ample amount of volume which they wanted to trap, they will then reverse the market, right? So if you get what I'm talking about, I'm basically talking about things in manipulative manner instead of just price action or Elliott wave. So anywho's, long story short, shorts are still possible here, right? So that's my reason for not entering any longs right now. I'll look for this market. If it crosses higher than 38.50, that will interest me for putting in shorts. But overall, you get the picture. The analysis is very clear. I believe you can take this knowledge and do what you must. Let me know if you guys have any questions on this. And Steve is saying, agree with bull trap. Yes, Steve, it does look that way. Let's see how it goes. And what about other guys? Jill, Clever, Hari seems to have disappeared. Are you guys clear on this discussion on the S&P? If you are, please type in understood, clear or something in the comment section. Before we move over to our last charts, Nifty followed by Bitcoin. And Jill is saying thanks. You're welcome, Jill. She's saying seems fair enough. All right, so guys, let's head over to our last two charts. And before I move ahead with the last two charts, again, I'll request you guys, you hit the like buttons on YouTube or TradingView, wherever you're watching, and obviously share it with at least 3 of your contacts or 3 of your groups. If you have WhatsApp groups, Telegram groups, and another trading groups which you have on whatever platforms you guys use, please make sure you have shared the content over there so as to help us increase our reach, right? And one thing I wanted to tell you guys that if you have already enrolled and completed my video course, then we are planning to launch the next batch, which is obviously again having very small amount of limited seats, right? So if you are interested, and if you have, again, the condition is that you have completed the video course, then you can contact me via the contact, no, it's not the contact us, the training program LT page, because additional information, if required for the training program, is only provided via this inquiry form. So that's the announcement for the batch I had to make within the webinar. So let's move ahead with our last two charts. So Nifty, one of the two counts which we are following. This is the count we have been following, or which was discussed in the last webinar. So what basically is happening here, we are expecting a triple zigzag correction in the downward direction, right? So last time when we discussed, we expected or not expected, I basically pointed out that either from this point the market can head straight down or it can go up and then down. So you can even watch that in the last webinar's recording. So it seems the scenario it is following is to go first up and then down, right? So basically we expect the market to continue downward, right? For that, we will obviously not be entering right now. The short should not be entered right away, because in case we are wrong, we will know if the market crosses the last high of 18,240, right? So we can either place an alert, but if you are trading it, you don't need to place an alert. You will already be seeing this on screen. It's an important level for this counter. On the downside, because my primary view is downside, so we can either watch for levels around 17,930 or lower. So below 17,930 or lower levels, we expect that the market continue down for the wave Z. right? So that's our primary view. More downside to be seen. If we are wrong, we will be considering the bullish possibilities above 18 to 50, which is basically the recent highs, right? So that's my take on Nifty, more or less sort of same as the S&P's 500. It is following in its lead because it went up. We saw a gap up and whatnot. So that was my quick take on Nifty here. And let's quickly head over and check the chart of BTC before we end our discussions. So BTC, basically nothing literally new here other than the fact that it is sort of seemingly taking out a trend line here. So far as you guys have been following me for many sessions, we have said many times that this market is open for more downside, and currently it is still open, like it can straight out give a downward movement. If you want to enter shorts, I don't believe many brokers do offer shorting, but if you do, then we will possibly look for lower levels around 5900 or lower. Targets we have already discussed so many times, 15 to 50 and 14780 and lower levels. And if we are wrong, then we will only be interested in longs about 21600-ish levels, 21300-ish, 400, basically whatever this high is, 21430, 40 something. So basically the view remains the same. It is trying to seemingly take out this trend line, but it could be a false break. Even if it's not a false break, as I said many times earlier, it is also possible that this market goes and does some sideways drama before the fall, right? Eventually, I'm not really interested in this counter because of this extremely sideways movement. So nothing really to add here. It is basically just the same as we discussed last time. That was all for our discussion, guys. I hope you liked it, and if you do, please hit the like button on YouTube or whichever platform you are viewing, and make sure that you share it at least in 3 of your circles, right? Anyway, we can let Nifty moves with the SDNR. Yes, Hari, we can, but I'm not going to discuss anything of that sort here. That will go sort of beyond the scope of these public webinars, and also the relation with USDNR is not 100%. Okay, you're welcome, Steve, and thank you for joining in, guys, and I'll hope to see you in the next one.